Hello, master traders and money magnets. We had FOMC today. Uncle Powell, he came and spoke today. He said the economy was good. That's what he said. He said the economy was good. And the SPY, it popped, hit that 570 level. Couldn't break out intraday. Got some rejection there towards the end of the day. But we had a bounce, guys. Relative to yesterday's close, we had a higher close today. How did we trade today? Well, I wrote in my Discord first post of the day. Yesterday, referring to yesterday, Tuesday's price action, a rejection from 565 and a breakdown of 563.5 led to a nice drop down to the 559 level. From here, bulls need to invalidate yesterday's breakdown and clear those levels to put high targets in play. If bears can keep price below 563.5 and break down both the 562 and 560.8 level, buy zone at 559 can be tested. Again, below, bears are in control with 556.5 and 555 in play. We'll always, as usual, we're always looking to react. This is the first candle of the day. Right here, 9:30 candle. It was very trappy. This is all pre-FOMC stuff. Broke down. And then what happened? Recaptured 562. False breakdown. Cleared 563.5. Pretty trappy. Tough to trade because of how trappy it was. Level to level move. Right to my 565-ish level. From there, hit 565, back tested 563.5. It held, cleared 565, and just came a few cents shy of the 566.4 level. This was all pre-FOMC price action. From there, false breakout setup, broke back below 565, hit 563.5. Before FOMC, or right when FOMC data got released, the decision rate, it hit 562 as support and bounced. Okay, now pre-FOMC price action was trappy, was challenging, but once we had FOMC, guys, it was just a push to the upside up until we hit that 570 level. Recaptured, cleared 563.5, cleared 565, took a couple of tries, but managed to take out the high of the day from around the midday, of course. Took out 566.4, which was a fib level, and closed above, hit 570. Now, we got to go to the daily chart, okay? The move wasn't as big as I had hoped. Very trappy pre-FOMC. After FOMC, had a nice move, but, they started with the trap. And then it gave us a decent push higher. It wasn't that impressive or as impressive as I hoped. And then we had Uncle Powell saying, the economy is good. That's what he said. Well, whether you believe the news and the people that report the news or not, I believe in the price action. Today, we can't fully say we are bullish yet. We have short-term bullish reasons. We're above the 5 daily moving average. Recaptured the 5 daily moving average last Friday. Back tested it as a support yesterday. It even held as support today. And then I had this downtrend line that started from late February, had a second touch March 3rd. And today we had our third test. If there was ever a time for bears to step up, why not tomorrow? Preferably tomorrow. I mean, FOMC data's released. What else is there to wait on? At the third test of this downtrend line, bears need to step up here. Okay, you guys also see this triangle structure I have, bear flag, wedge, whatever you want to call it. That is the consolidation structure. That's the consolidation pattern. And for bears to break, they need to break it down. To end it bearishly, they need to break it down. We recaptured 566.4 today. So to be bearish, breaking down 566.4 tomorrow will give us a false breakout. Third test of the downtrend line. Break down the fib level 566.4. Break down 565. That would break down the structure right here. It would be very bearish. This could be when the next leg down comes. All right, we either test the previous low, which is around 549-ish, or we go to a new low and to continue the bear trend. Okay, now if we already get a breakout, staying above 566.4 is a must to keep the false breakdown intact. And breaking out 568 and 570 will put the 200 daily moving average in play. To recapture the 200 daily moving average, SPY needs to get above 573-ish. Must get above 573. And if it can get above 573, it'll recapture that 200 daily moving average and break out this wedge, break out this triangle structure. That would be pretty bullish, at least for maybe a retest of other fib levels. We cleared 575. I have a fib level all the way at 583.4. And then the 50 daily moving average would definitely be a possibility. Okay. The bull case, it's only possible if we can break out this downtrend line. Got to get above 570. Recapture the 200 daily moving average. Get above 573. That would be pretty bullish in my opinion. Okay, so recap. We got the bull case and the bear case. All right. Breakdown 566.4 and 565 will be a breakdown of the triangle structure. Maybe we'll get the next leg down. And if we clear and recapture 570 and 573, that would be a breakout of this downtrend line and a recapture of the 200 daily moving average. Okay, guys, we know the levels, we know the setups. Now it's on us tomorrow to react unbiasedly. Triple Q also has a structure of its own. I got a triangle pattern here. It managed to recapture that 479 fib level. So bulls need to show some follow through now. To break out this triangle pattern, they need to clear 484. That would break out the structure and clear a fib level. Okay, and that would put 486, 490 or higher in play. The 200 daily moving average is around 493-ish. That could be possible if we can stay above 479 and break out this triangle pattern. Got to get above 484. All right. If we are to be bearish, we got to break back below 479. Okay. Break back below 481 and 479 to break down the triangle pattern. It got to break down 477, and we could possibly get the next leg down for Triple Q. All right. We know the bull case scenario, know the bear case scenario. Moving on to Tesla. Tesla managed to recapture that 232.6 level. Okay, so that will be the equilibrium level for tomorrow. Although Tesla is well above that now. Okay, but if we are to be bearish from here, I have support at 236 and the fib level 234.5. And then that buy zone 232.6 where the potential double bottom was. Bears will need to break back below those levels to get bearish. All right. If above, we can possibly get a bigger bounce. Tesla, we need to stay above 238 and clear 240 to put more upside and play 242, 243.7, 245 or higher would be incoming. All right. There's a gap right around that 247 level as well. NVDA, overall a chop day, but I did it did manage to kind of fill in the gap around the 119.5-ish level. Didn't close above it, but we had some selling pressure, some activity there to fill in the gap. It back tested 119.5 fib level and it rejected. Right, went a little higher than that, but overall rejected, did not recapture that level. So now that the breakdown or the gap down level has been filled and back tested and rejected, bears need to show some follow through by breaking down more support levels at 117, 115, and 113. If it does, it would be very bearish. Okay, I can't fully get bullish and favor more bounce unless we can recapture that 119.5 and clear that 121 level to put 123 or 124.6 plus in play. All right, guys, before I go, here is Coin. Coin managed to recapture that fib level at 185.8, and it led to a pretty nice bounce to the upside. Okay, guys, as of right now, Uncle charters have resistant level at 192, 193.7, 196, 197.6, and 200. Those are the levels that I'm watching. Okay, as far as support goes, 190, 187, and 185.8 are support levels. If we are to get bearish again, we want to see those support levels fail. Speaking of support levels failing, here is the VIX. I mentioned if we can clear that 22.5 level, I would be bullish. And if we break down that 20.8 level, I would be bearish. Well, we broke down that 20.8 level and it hit the next fib level around 19.5. If there is more downside to be had, 19.5 must fail to put 18.6, 17.7 or lower in play. Trust no bounce unless 20.8 can recapture, and that will put 22.5 or higher in play. All right, that's what I have for you guys for now. Make sure you guys to subscribe and turn on the notification bell. I will make a pre-market video for us and to cover the other ticker symbol. So I hope to see you guys there. Thank you guys so much for watching. Peace.